How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, you may have noticed my voice sounds a little bit nasally. I'm certainly just a tad under the weather. Now, could it be the Omicron variant coming out to play? It very well could be, and that is exactly what a lot of investors across the board are worried about, the implications of the Omicron variant, what exactly it's going to do to the economy as a whole. Now, investors are also watching what exactly is going to be happening when interest rates spike in 2022. All in all, since this news has come out, I mean, we've been on a 3-day losing streak, and although that the stock market is back on the up and up, we're certainly not where we were just weeks ago in a market rally. I think we're going to have a ton more volatility as we go through the next couple of weeks into 2022 until everything really soothes over. Now, in terms of my personal account, I'm sitting at $82,376.77. That is actually up by $1,039.60 from my last video. And all in all, I want to go ahead and break down the positions I've been doubling down on this past week. And of course, if you want to follow along and make similar investment moves, by all means, just do your due diligence before doing so. Now, before we dive in, make sure you go ahead, tap on that thumbs up button. It helps me grow this channel and get the word out there. And of course, if you haven't done so already, go ahead, tap on that subscribe button while you're at it. I'd love to have you on this journey with me. Now, YouTube, let's go ahead and dive right in. Just to get right into it, I want to go ahead and kick us off by talking about Medtronic, ticker symbol MDT. Medtronic is a medical device company that was founded back in 1949, and since its founding, it has just been silently leading and revolutionizing the entire healthcare industry as it goes. Now, in the last 3 to 4 weeks, I have been harping on Medtronic. It may even sound a bit redundant of me to just keep throwing this company at you, but my job here is to share the stocks that are truly not only on sale, but are going to deliver a ton of value over the long term, and Medtronic certainly fits that criteria for me. Just taking a look in the last 3 to 4 months here, we can see Medtronic was at a high of $135 per share and has since then come down to around $101 per share. That is about a 33% flash sale opportunity for all of us long-term investors to double down on this position. But it's most important to understand why exactly Medtronic has been falling, and there are multiple reasons for why it's been on its decline. In November, they actually missed on their earnings report. Of course, that scared off a lot of investors that were invested in Medtronic, but there is a bigger picture at play here in which we all must understand. It comes down to the pandemic, right? We have the pandemic that not only created a global supply chain issue, but also labor shortages, which have been putting a ton of pricing pressure on Medtronic. And of course, that doesn't allow for them to always hit their sales quotas, and that translates into a loss of confidence for investors. Now, on the other hand, with the resurgence of COVID cases and the Omicron variant taking us by storm, we certainly have elective surgeries once again being pushed into the future. And with Medtronic being a medical device company, go figure, they're going to be taking a hit from that as well. But all in all, once the pandemic really soothes over, Medtronic is once again going to begin to soar. That's my personal opinion, but also the opinion of analysts out there. Analyst expectations are coming in at a median stock share price of $138 per share and a high stock share price of $153 per share. Now, ultimately, as we are long-term dividend investors here, taking a look at Medtronic's dividend, they've been paying them out for 44 consecutive years, increasing those dividends year over year, making them a rock-solid dividend aristocrat. As of right now, their dividend yield is sitting at 2.5%. And last week, as that stock of theirs dipped, I went ahead to pick up one more share worth of Medtronic for $103.28, bringing my total share count of Medtronic to 17 total shares, and I'm looking to increase that share count up to a goal of 20 shares worth of this incredibly valuable company. Next up, I just could not help myself but pick up more shares worth of Stag Industrial, ticker symbol STAG. Stag Industrial is a REIT that was founded back in 2010. It's primarily focused on the operations of distribution centers as well as warehouses and other industrial properties. They have 517 properties spanning across the United States. They've done an outstanding job in growing a very sizable portfolio since their founding. Now, I literally just created a video on on Stag Industrial. So if you want to check that video out, go ahead, click through the link above. It will take you to a video that not only talks about Stag Industrial, but two other explosive growth type of REITs moving into 2022 and beyond. Now in today's video, I'll just keep it short, sweet, and to the point, and sharing with you that Stag Industrial has main tenants from Amazon, FedEx to GXL Logistics. 40% of their portfolio is actually engaged with e-commerce fulfillment, which is the way of the future, and gives me a ton of confidence in sharing with you all that Stag Industrial is just going to continue to have explosive growth. And just talking in 2021 alone, they spent $1.1 to $1.2 billion worth of acquisitions, and that just goes to show that this company is just not done growing, not even close, and perhaps has only just begun. Now, analysts seem to be equally as excited, coming in with a median share price for Stag Industrial at $47.50 and a high stock share price of $54 per share. So I went ahead this past week to just pick up one more share of Stag Industrial for $44.65, bring my total share count at this point in time to 7 shares worth of Stag Industrial. Just going to continue to dollar cost average my way in and collect on Stag Industrial's dividend, which is currently sitting at a dividend yield of 3.21%. And I only expect that that dividend yield will continue to grow just as Stag Industrial will moving into the future. And last but not least, we have another REIT, my REIT of choice, and truly the gift that keeps on giving in terms of dividends. This REIT is Realty Income, ticker symbol O. Realty Income is a REIT that I often talk about, but yes, I'm throwing it at you guys again here because it is that powerful of a REIT, and a REIT that I feel should be in every dividend investor's portfolio. Now, being founded in 1969, they've done an outstanding job in amassing a vast portfolio, which now stands at over 11,000 plus properties spanning across all 50 states, well into the United Kingdom, Puerto Rico, as well as Spain. And they are only continuing to expand well outside the United States with over 650 clients. Realty Income is 110% a safe bet in my opinion. Now, most importantly to understand as an investor in Realty Income is that they are a net lease solutions REIT, which ultimately means that their tenants are just responsible for just about everything, meaning Realty Income is just collecting on that rent. They really don't have any expenditures, and they're using all of that money to continue to expand, making them a powerhouse of a REIT play. When it comes to their dividend, they're a dividend aristocrat, paying well over 25 years worth of consecutive dividends, paying that dividend out year over year and increasing it each and every year. Now, at this point in time, their dividend yield is sitting at 4.36%. Analysts only foresee continued growth as well when it comes to Realty Income, coming in at a median stock share price of $79 per share and a high stock share price of $92 per share, giving me more confidence to just continue to buy more shares worth of Realty Income, which is exactly what I did this past week, buying another share worth of Realty Income for $67.79, and then another 2 shares for $135.46, spending a grand total of $203.25 on Realty Income within this past week. And my total share count is now at 74 total shares worth of Realty Income that I'm only going to continue to double down on it until I hit 100 total shares worth of this magnificent REIT. Now, YouTube, that is it between Medtronic, Stag Industrial, and Realty Income, the 3 stocks I've doubled down on this past week. If you like what you heard, you learned something new, drop those comments below. I'd absolutely love to read through them. Understand I am not a financial advisor, so by no means should you just invest in these companies prior to doing due diligence on them. But of course, go ahead, tap on that thumbs up button and help me grow this channel. And if you haven't done so by this point, tap on that subscribe button while you're at it. YouTube, happy holidays, and until the next video, I will see you all there.